Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, August 29th, and we are looking at the DXY chart, which we typically start off with for a general macro overview. And as you can see, DXY dropped all the way back to the 103.6 area of support, which was obviously previously resistance. And from that, we can obviously see equities are having a lot of fun, as is Bitcoin. So let's go ahead and dive in, figure out what's going on. We've been saying this, if this drops back, risk is going to have fun, especially if it deviates under. So we've discussed this before in prior videos. This deviation going back under would probably send it back down to this 102 area, maybe at least 103. And that would be pretty bullish for risk assets, considering they've been running inverse to the dollar. So watch out for that. But also, if it holds this 103.6 level into tomorrow and Thursday, you could also see risk get cut down on this type of movement. So if it holds here and moves up, then you're probably going to see the S&P and crypto pullback. So very important to continue to watch this on a 4-hour, 12-hour, see how things are shaking up towards the daily close today and how things open up in the US session tomorrow. So looking at equities, as we can see, we held the 4440 level pretty well. We obviously, swept under it a little bit, held the weekly VWAP. We know, anytime there's confluence of both support and the weekly VWAP, that's going to be strong support. Obviously it was. Prices shot up today. They broke above the highs of last week, which is always critical for a move higher. And now we are bouncing back into the larger range that we were in, dating back to July and August. We're not fully there yet. In my opinion, let's zoom out a little bit. We need to really get above the 4,500 level, in my opinion, to get back into this larger range. But if we do, then we can start talking about these 4630 highs again. So what I would like to see from the market is, we'll probably have some volatility here. We're getting to be overbought. We did just sweep this high as well. So what I'll be looking for is a drop back to 4480. I want 4480 to hold, and then I want that to spring load us above 4495 and up towards 4500, 4510. So if we can basically do something like this and reclaim that, then we're looking really good towards 45, 60 and possibly higher. But this is going to be a precarious area because we've got a lot of green candles today. The market rarely ever goes straight up. We still have PCE on on Thursday. We still have jobs numbers coming in on Friday, but JOLTS today looked pretty good. Let me see if that data statistic has come in yet. So yeah, job openings were, 700,000 less than expected. The home price index is not as bad. Consumer confidence did drop. So this is all kind of what the Fed wants to see. So really good for the initial data print today. And obviously that's what's carrying us higher. So this is resistance at, 44.95, 4,500. I again expecting a bit of a drop down to 44.80. If we can hold that level, maybe down to 44.65, then we should spring load, break above the 4,500 level, get to that 45.10 area. Remember this was pretty solid resistance. Dating back multiple times, as in the beginning of August. So once we get above that level, then things are going to look a lot more smooth for equities, but we still have to get up there. So I'll wait for, if you're not long, wait for a bit of the pullback. Don't get crazy. Things are not going to go straight up. You should have another entry, around 44.65, 44.80. I would bet, possibly into tomorrow. Could, 100% could shoot up straight to 45.11. It could, but I think your risk versus reward certainly waning, the higher we go in this rally today. So my opinion, best to be patient. Let's see how these key levels react. Hopefully we continue bullish into the week with some more good data. It is important to remember that tomorrow we have GDP revision, Thursday we have PCE, and Friday we have unemployment numbers and non-farm payrolls. So there will be more volatility throughout the week that could contradict the good data we got today. So let's look at Bitcoin. Now, we did tell the TTC community if we crack above this 27.2 level, we'll probably end up grabbing this 28.3 level. What's weird is that, this wick does not kind of line up with anything significant. It does kind of line up with this high from the first drop back on the 17th. But in my opinion, I was kind of expecting a 28.3 grab, and I still think that that's definitely plausible. But very similar to how we were looking at equities, there's a larger range up here, and I'll probably have to go to the 4-hour to make things a little bit more legible for all of you viewing. But we really need to get back above this 29K level, because basically we had a bunch of quick price action trading beneath it, and then once we cracked below it, that was when we really dropped, right? So the 29K level is very similar to this 45 in the sense that it brings us back into the larger range that we were trading in. So what the bulls want to see is obviously us trading back above 29K before we really start to bring in a lot of bullish firepower. But getting above that 28.3 level is also significant, because this is that high from that May 28th rally before we ended up busting above that in June. So if we can get above 28.3, then we should, run to 29. Maybe it's a choppy rise, but we should end up getting there. And then obviously, if we get cut at 29, then we'll get sent back to 28.3, or we'll take 29 and then start trading into 29s and 30s, and try to retake these highs from way back in July. So that's still a long way to go, but the Grayscale decision today was very good for the markets. And if you're watching this and you're like, why is Bitcoin up? Grayscale won the lawsuit versus the SEC. The SEC still has a few options in their bag of tricks, but it's much more difficult for the SEC to try and win this in the way that they want to. So very important to consider that. And then on Friday, just because the SEC won this decision doesn't mean they're going to turn around and start, approving ETFs. They definitely could, but it would be very unlike Gensler to just take a dagger in the heart, die, and then, and roll over. So I would expect them to continue to fight whatever they can and at least do another delay. But remember, we have BlackRock, we have VanEck, we have, Valkyrie. We have a lot of ETFs that are waiting for approval Friday through Monday. A lot of those will come Friday because you're not going to get any news on the weekend, and Monday is Labor Day, right? So most of that news should come in Friday, and that could be a catalyst that sends us back lower, especially if they get, denied or delayed. I doubt they'll outright deny after this case, but you never know. A delay is likely. So it's important to remember that Friday could be a little bit negative, and then we have the PCE data. So PCE comes in bad, that would cut us down. And then if more ETF delays, that would cut us down as well. So important to remember, a lot of bullish euphoria right now, and everything is pointing in the right direction, but there are some data points on Thursday, on Friday, that could certainly hurt us. GDP on tomorrow, PCE Thursday, unemployment Friday, multiple ETF decisions on Friday. That's a lot of news for massive green candles. So what I'm looking at right now is, obviously, I want to see what happens at 28.3. If we don't get there, I would expect us to eventually grind up in some way, shape, or form. Maybe we hold the 27.7 level. Maybe we bounce back down to 27.3. and bounce there and then head back up. So this is tough sledding. And obviously, if you're not long, this is when you just kind of watch, wait, and see, and line out your levels. So my levels are above 28.3, probably going to run up to 29. Get rejected at 28.3. 27.7 is a significant level. I'll go ahead and draw that line out for everybody. So 27.7 is a level I'll be looking at. And then obviously the 27.1K, which is a little bit more descript. That level dates back to that May high, which is not entirely significant right now, but I have a feeling that it could come into play, considering we just jumped the shark on that. So watch this. Basically, this is kind of a very large range if you want to kind of look at it. So this is all kind of just one giant fair value gap. And then now we're kind of just forming levels in this range. So the top end of the range, 28.3, you got kind of 25% of the range is here, 30%, another 30%, then another 30%. So all of these levels I will be watching very closely for possible long scalps, meaning bounce off 27.7 long up, bounce off 27.1 long up. If we get back to 26.7, bounce off there, long up. And then, we'll see what happens at 28.3. So 28.3 could be a short back down to 27.7, 0.7 and then long up. So there's going to be plenty of opportunities to trade this volatility in this range. But I do think that it is odd, in my opinion, for us to kind of take that level and not run up to this 28.3 level. So I would probably expect that in the near term. And obviously, if that fails and we close the 4 hour under 27.7, then it becomes more likely that we just end up trickling back down to 27.2 or possibly 26.8, 26.7. Somewhere down there. So pay close attention to this 4 hour. We know that the moving averages are very significant. And then another thing that I wanted to point out to everybody as well is what's going on with the 1 day chart. So let me remove these drawings, make it a little bit more clear for everybody. And we share this with the TTC community, but the estimated 200 moving averages have been very significant. Bust above it, long. Deviate under it, big long. Deviate under it. Oh, that's ugly deviation. Deviate under it, big long. Deviation under it, is this a big long? So that consider nothing ever, doesn't mean it's going to be 1-to-1. Everything's going to be the same and fine and dandy. We of course still need to get above this level. We still need to break above the 29K level, which is right around here. So we do have some fight still left in it for the bears. But I will say, on a macro, timeline, each of these deviations has done very well, and crypto does kind of like to work in the rule of threes. So if we can hold above 27.2, which, remember, dates back to the chart that I had drawn. Let's pull this back up. Remember 27.2 sitting right here. If we can get back, if we can hold above 27.2 on the daily chart heading into next week, I have a feeling that you could definitely see some euphoria. And then obviously, if we fail back under 27.2, then we're going to trade back down to these lows. So 27.2 critical juncture, and then obviously 27.7 also critical juncture because it's the 4 hour estimated 200 moving average. So a lot of data, a lot of lines, a lot of information. But anytime you see a $2,000 move for Bitcoin, got to start readjusting your bias. Got to look for those key levels. Got to figure out how price action may flow so that you can time your trades, make some money off these moves. Looking at Ethereum, I won't spend as much time as Bitcoin, but it's very similar to equities and Bitcoin at the end of the day. So we got our previous range up here. It's not as sexy and clear as Bitcoin, but in my opinion, we want to get back above 1830. 1830 is really kind of the low of this larger range, and we're still quite far away from 1830. So Bitcoin's a lot closer to 29K than ETH is to 1830. And if we look at the 4 hour, Bitcoin is above its 4 hour estimated 200 moving average, while ETH is trading below its 4 hour estimated 200 moving average. So looking at ETH, we didn't officially grab 1750, which makes me think that we could definitely still run it and either deviate or reclaim it. But what I'll be looking closely for is the 1750 level, run above it. You've got great confluence here. So above the 4 hour estimated 200 moving average, above this resistance level, you should be able, if you can get above here, you should be able to get to 1780. And then you're a short hop, skip, and a jump away from 1800, which can then bring you to 1830. So if you can get above this 4 hour estimated 200 moving average and hold it, you've got some really clear level to level trading to get back above that 1830 level, which we know is critical to get back into that previous range. And then on the alternative, if we get rejected here, obviously probably trade back to the 1715 level, which obviously it's relatively close to. So I'm not recommending jumping into anything, but this is how we're looking at price action. So then if this level holds, and then, maybe that's the springboard to get above that 1750 level or a possible another rejection, we could just, remember, we could just range. Price doesn't need to keep jumping up or down. It can just consolidate. So that's something to consider. And then if we get back under 1715, then we'll drop back down to this 1680 level, maybe just 1700, because we do kind of have this high here. But it's very important to look out for if we drop back below 1715, we'll probably end up, we're basically back into this range down here, which implies, dropping towards the low end of the range, at least, down here, very similar for Bitcoin. So nothing is 100% clear. And again, we have a lot of data coming out this week that could, negatively impact the price action we're seeing now. But the moral of the story is the SEC's fight got a hell of a lot harder to deny spot Bitcoin ETFs. And obviously, you're seeing a lot of euphoria around that decision right now. So my suggestion to everybody is play it level to level. Do, you know, if you want to buy long-term buys, you know, that I'm not going to argue against your DCA strategy, because arguably long-term 28K is not a bad bet. But I do just, you know, I am concerned about the data that is going to be presented this throughout the rest of the week, especially the ETFs on Friday. And so it just really makes me hard to say you can long here and hold longs, or if you did long below, that you should just hold it to the end of the week. I do think people should be taking some profits. You know, a lot of the jumps we've seen have either been reversed or ended up just sitting here, you know, in these really flat trading motions. So, you know, my big numbers are obviously the 29K for Bitcoin, and the 1830 level for ETH. And, you know, we'll see how we react to these lower levels that I have lined out, because ideally I'd like to see us drop back a little bit, reset some of the indicators, you know, show some strength at one of these levels, and then re-long it, hopefully higher. Or if we just continue higher, you know, maybe we get a nice sell-off and a piece of bad news, and then you short it back down. So there's still going to be plenty of opportunities. If you miss this move, don't be concerned. You know, we got some volatility. There's still some life left in the market, still some good and bad news on the horizon. So there's still some opportunities to make some trades. So with that being said, good luck, happy trading. See everybody tomorrow, and or in the TTC community, where we're dropping insights morning, day, and night. Good luck.